Hello? Yes, you heard. Yeah, man. That's how it goes, you know. Anyway, I have to run now, you know. I'm going to the insurance company today. Yeah, we'll talk later, okay?
Is everything alright where you're popping?
Well, I'm trying, you know. It's a lucky thing I insure the house.
That's so true, that's so true.
Only this? This can't even buy up my furniture.
But remember now, Mrs. Wright, only the house was insured.
My God, I can't believe.
Mrs. Wright is not the first homeowner at a loss when her assets are damaged, and she discovers that her insurance policy is not adequate security. In this episode of Justice Matters, decoding property insurance and choosing the right policy to suit your lifestyle. Living within a small island state, homeowners are at risk whenever a disaster strikes, more so within the hurricane season, June to November. Then there are the earthquakes that can occur at any time. For this reason, many have sought the protection of their valuable assets. But as in the case of Mrs. Wright, there are varying degrees of property insurance. A policy may cover all things within the boundaries of the premises, even your visitors. Or
you don't have to insure everything. So if you want to insure just the contents of your home, you may do that. When you insure the contents of your home, you can also include the general contents, as we would refer to it, being your fridge and your stove and your chairs.
insurance companies and their clients sometimes find themselves at odds, even with the best intentions on both sides. In such a situation, the Financial Services Commission is there to help. At the FSC, the Insurance Division's primary responsibility is to protect the interest of policyholders. The division gets its powers from the Insurance Act.
But what we do, if we find that insurance company is in the wrong, then we instruct them to make amends and to do the right thing. When the FSC gives an instruction, it can be interpreted as what legally as a direction, and a breach of a direction can attract penalties.
Insurance companies have found too that persons don't always disclose the truth when the policy is being created. Don't hold back information because you're afraid of an increase in the premium.
What it is you have not disclosed may be so important that we may be in a position to say we are not honoring this claim.
The point is, communicate well with the insurance company and thoroughly read the contract.
They use here and after and all sorts of terminology with a lot of people, which are boring, which people don't understand. But the good thing is that probably over the last 10, 15 years, a lot of companies have started preparing their contracts in plain English so that, people like yourself and myself can understand them.
Questions must be asked at the processing phase to ensure that the information provided is accurate and understood.
People buy insurance without doing the necessary homework. They don't understand the nuances of insurance. They don't do any research.
Phrases such as deductible, average clause, and the sum insured are critical to what a policyholder may get in hand in the event of a loss.
A deductible requires that you pay that portion first before your policy responds. The normal deductible on a homeowner's policy is 2%. So if you're insured for $2 million, you will be required to pay the first $40,000. If you do not insure for the full value, the company will only pay the portion for which you are insured. For a property is valued $10 million and you're insured for $7 million, you're insured for 70%. So if you have a claim, we will pay 70% of your claim.
What I've found in practice over the years is that people in selecting the amount of insurance to buy, normally they tend to just pick a figure out of the air and say this is what the house is worth. The value that you insure for should not be selected arbitrarily. It should be arrived at by taking into consideration what it's likely to cost to replace that structure.
As for National Housing Trust mortgages, the insured amount is also based on the property's worth at the time of valuation. So NHT homeowners are advised to carry out a valuation of the property during the life of the loan.
The mortgager's property is covered for the full reinstatement value of the property, meaning the cost to replace that property if it is totally destroyed.
Do your research. Be honest with your insurance provider and ensure that your policy covers the full value of the sum insured.